Hey, this is Danny Riley with today's MrTopStep update. Sorry I haven't been around for a while, but I've had some personal family problems I had to attend to. But anyways, back to the markets today. You know, the markets, the S&P in particular, had a little bit of a sell-off and then recovered throughout the morning. And right now, I think we're around the 1237 level, which is only about 5 handles off the contract highs of 1142, that level that we've been bouncing off for the last couple of days. But you know, the real thing here is that the markets are kind of in a back and fill situation again. And as much as the bears may want it to go down, it doesn't seem to be cooperating very well. We don't get very many one-day declines. We have very many two-day declines, and today we're kind of proving that point as we move higher throughout the day. You know, as far as the volumes are concerned, we exactly at about 11:30 Central Time, we had 1 million minis. Now, of that million minis, 250,000 of that came in from Globex pre-market, pre-open, the 8:30 open, and 110,000 of that came from the S&P mini spread. So we're talking somewhere in the range of 640,000 minis. That's not a lot of volume. That's not what these locals in the pit came here for. Now, the other thing is in the big S&P, the big SPZ had only 7,000 contracts when we left the floor, and in the SPH, the March contract, they had 10,000. That only leaves 3,000 in the outrights for the locals in the pit. The other remaining volumes will be tied up into the S&P spread. Now, you know what the thing is, what we're looking at here today is we're looking at a semi-weak kind of back and fill type day. And one of the things that we pointed out in the global report is we don't get a lot of one-day sell-offs yet, two-day sell-offs. And the price action today is kind of indicative of what we usually see after a market that comes down the day before. We get a little back and fill and then go back up. Now, as far as the statistic for tomorrow, the S&P cash study for the D's expiration for the last day, the quad, is a 18 up, 8 down day. In other words, out of the last 26 occasions, it's been up 8. It's been up to 18, down 8. So one of the things that we pointed out earlier in the week was that if we got a little bit of a pullback going into the expiration, that we would probably go up, into the expiration. As far as trade is concerned, it's all tied up in the spreads. It's people are trying to get out of these positions, so roll into the March so they can continue to trade. But the other part of this is that people really, and a lot of the hedge funds and banks that we talk to, they're not talking about putting on more risk going into the end of the year. If the markets stay the way they are, drifting higher, there'll be very little trade to deal with as these guys come into the year end. Now, in reverse, if the market sells off, they'll have to do a lot of adjusting, they'll have to do a lot of hedging, and that's where the volumes will increase. But it's our mindset, the way the markets are set right now, is that we're going to continue to back and fill and kind of continue to move higher into the end of the year. And that's what a lot of the guys on the floor are saying. Now, last thing, the Pitbull has a trade that we look at, and it comes in on the Thursday before the D's goes off the board. And what he likes to do is he likes to buy the expiring contract. That would be the December futures. And the idea with that is that there's always some type of buying left over for Friday morning, which pushes the futures up. That's a trade that we're not really suggesting, but it's something that he does, and he's been pretty successful with. Other than that, you know what? We'll see you tomorrow with another update, and we want to let everybody know we're in a retooling phase, and we're going to come back bigger and better than ever. We'll see you tomorrow.